And a new study from S&P says it'll keep rising. They write that demand will jump 50% to 42 million metric tons by 2040, as the metal is critical for powering data centers, homes, businesses, and military systems. And S&P warns supply is limited. Joining me now in an exchange exclusive is Dan Yergin, the vice chairman of S&P Global. Dan, it's great to have you here. Welcome.
Well, thank you, Kelly. It's very good to be back with you.
You know, I was trying to go back and remember the first time you published on copper, warning and trying to draw attention to the fact that so much was needed and we're undersupplied. And not that we can buy it, but I thought to myself, if someone had bought it then, I mean, it has absolutely soared. So not that you're here to give trading advice, but is all of this bullishness now priced in or not?
Well, I think that some of it has to do with disruptions in mines that's occurring in some parts of the world, lack of the impact of tariffs and uncertainty about what happens, and also waiting to see what the Federal Reserve does overall. So I think those are the short-term factors, but longer term, I think the prices are, if not at this level, at least pointing to the fact that the world's going to need a lot more copper, as you said, about 50% more than we have today. And the main reason is that the world is electrifying. We estimate in our own that by the year 2040, the world will use 50% more electricity than it does today. That's like building 650 nuclear power plants every year.
Wow.
And copper is the metal of electrification.
That's like building 650 nuclear power plants every year?
Yes, that's what the demand growth is looking like, because a lot of the demand growth is obviously in the developing world, but now with the advent of data centers, AI, you suddenly have this voracious appetite for electricity that has really, in fact, caught traditional utilities by surprise because they've been used to flat demand. We estimate that data centers used about 4% of U.S. electricity last year. By 2030, which is pretty close, it'll be more like 14%. And none of that happens without copper.
I found it was in 2022 you guys first were talking about this. So over the past 3 years, you know, the price has risen. It hasn't risen like NVIDIA's share price, to be sure.
No. Hardly anything has.
Correct. Commodities investors know that these things are hugely cyclical. So they might say, okay, well, I could get in on this trade now, but how do I make sure that there continues to be so much upside, right? Because you turn around and then maybe there's a soft economic data point because they can react to that. Or you turn around and, you know, supply is being brought online. I mean, that's traditionally, what was the famous bet in the 80s where they said, I think commodities are going to outperform the S&P and you always lose, right?
Yeah, that's right. Well, I think, I think that's true. I mean, cycles are there. And we have to remember that also copper is called Dr. Copper because one of the vectors of demand is the traditional core economic demand that we see in everything. And that's very responsive to GDP. So that will have an impact. What also matters is how governments treat companies who want to come and explore and develop copper mines. It takes an average, Kelly, 17 years to bring on a new copper mine. So you are making a bet on the future when you start a new mine.
What would you say about the metals rally broadly? I mean, it'd be one thing if we just said, wow, copper's really a standout. But if anything, it's underperformed. We have platinum, palladium, silver, obviously gold. You've seen what's going on there. What explains all of this?
Well, I'm not sure that I have the competence to explain that. Obviously, gold is responding to a lot of the economic issues and the uncertainties that are there and concerns. But I think that all these metals will basically also be driven by GDP and where expenditures are. And what we did on the copper study is we said, you know, it used to just be core economic demand, you know, appliances and buildings and so forth. Then you had energy transition. And by the way, an electric car uses 2.9 times more copper than a conventional car. And last year, although they're not going like hotcakes in the U.S., about 40% more of electric cars were sold around the world than the U.S. total U.S. new car sales. Then you have AI, then you have defense, and then you have maybe coming over the horizon all those humanoid robots, which are heavily wired with copper.